Okay, I'm gonna take a look at some charts this morning. What I have are three charts here. This is CBOE options total put call ratio. Okay. Um, if there's heavy put buying, okay, usually at lows, you'll get spikes up into here. Okay. If you have heavy call buying, okay, um, call buying down here, over here. Usually, for where we're at in the cycle, you usually get a dip or sideways. Frothy call buying, frothy call buying. This is at the beginning of the year. Basically, we'll mark some time, a little bit of a dip. Came down again, one more time, and then just recently, okay? So that's what I was looking for some frothy call buying, and that's what we're getting on the swing up here. So first off, the participants are now frothy and buying calls, okay, as we swing in the new highs here, okay. We still have to get the Russell involved for the bulls to keep this thing afloat. Frothy call buying again on here, okay. Now this one is equity, so I was looking for individual issues to get some call buying in here, and it's beginning to show up, okay. And then on the last one here, this is index call buying. Okay, so it's coming down also. Let's see here. What do we have? Some pretty good spikes down here. May, June, July, August. Call buying sideways, and then we had a rollover into post-Brexit. Or hold it, no. Where am I going back to? This is 15. This is China, and this is the first rate hike in the bottom. Okay, so we're getting. If we get another update today, I'm going to assume that we're going to get some of these indexes. We're at some round numbers here, that the indexes will come in. Okay, we're beginning to see it with individual calls on here. Now, to go along with these, this goes back to my chart on the pink dots. Okay, so we'll look at the pink dots real quick. Okay, so what do we have going on? So we have frothy call buying, okay. Here's the New York Stock Exchange. It broke out to a new high. Okay, now the pink dots summation index, okay, so it's individual issues participating in the rally, okay. So if we go back and look, here's 2014, 2015, okay, 2016. All right, so we have pink dots up in here. Then it began to diverge. You know, there was a dip, new high, didn't make it diverge, okay, in 2014. That was also some peaks for a lot of stocks and things that in general, right? Because we had a lot of issues up here participating. And then things kind of, meandered, and it began to diverge again on a new high, okay? Lower highs in the issues, but higher high in the prices divergence. We got this, got a bounce. And then a washout. Okay, so now the issues come running back again. Multiple issues are participating. We get a dip, okay, going up. We're trading higher, but the number of issues that aren't participating. Okay, so what we have now is we have somewhat of a divergence. I wrote about over the weekend that the pink dots would probably get on board, because what you're going to end up happening in a blow off is that the participants usually go after the junk, things that have been beaten up. They assume, a stock market is a market of stocks, and a tide raises all boats and all those, fun sayings. But what we have is on the New York Stock Exchange, we have a divergence going on here. We have a new high. Some of the issues are participating, but to go along with the frothy call buying, okay, could set up that you get a short-term peak on here, okay? We'll go down here to the NASDAQ composite. NASDAQ's our leader here, right? We're trying to get the Russell on board and join it. So the NASDAQ, same type of thing again. I think I wrote sometime last year about we're entering that, 1990, that 1996 to 1999, 2000, where you get that kind of blow off again. All right, so pink dots peaked out, rolled over. Pink dots rolled over. All right, come rushing out of here. Come rushing out across the board. It was a pretty good sell-off down here in the beginning of last year. Pink dots, pink dots. A little bit of a. This is coming into the election. Okay, so there was selling across the board. Okay, for the election. All right. Now this is post-election came off. Then it stalled and went down. It actually, the number of issues participating as we went higher declined. Okay, so for putting this all together, all right, we have frothy call buying at new highs. Okay, the momentum is there, but the angle of ascent. I looked at Boeing, and even on a logged chart, the thing is near vertical. Okay, let's take a look at Boeing real quick here, and monthly. Is that what I need to do? Okay. Weekly is a little bit better, I guess. Okay, so on Boeing, okay, so you get a move up, large sideways pattern, and a breakout. These are logged charts, and so the angle of ascent is beginning to increase sharply here. So basically, you have to, we're at that stage here where, stocks begin to go vertical. We're getting divergence in the dots, and then you have the frothy put call ratio. Okay, so just the frothiness of the put call ratios, and then the divergence here in the number of issues participating. It's very selective in nature on this. Okay. You can see the people, they're with, like I talked about, NVIDIA and the chips technology. That was the leader. Now they're all rolling into steel makers. They're doing the obvious thing here. All right. And we haven't even budgeted any of this stuff yet. So, what it is, how I'm reading it, is the participants think they're all geniuses here. You buy a steel company and it'll go up. Where were you 2 years ago at the bottom, kind of thing. So just to run through these again, here's the NASDAQ. We're increasing the angle of ascent. We have fewer issues participating. I mean, we had more participating before Brexit. All right, now, but it is swinging here. Okay, so if we do continue to go higher here, we need to get the Russell involved on the upside. But in the short run, if anything should happen on the markets, okay, we already have an issue divergence. Okay, so whatever the strong ones, whatever's at 52 weeks high, those will be the weakest ones. The strongest become the weakest, because what we're doing is we are mostly indexing, and that, so you're buying the top 100 companies over and over and over again, instead of having to go out and find individual equities. Everybody's indexing. They'll buy a S&P fund, or they'll buy a NASDAQ fund, or a tech fund, or something. So you end up just buying the cream of the crop over and over and over again, and you're leaving issues behind. Okay, so they're just buying the winners, and they're all piling in that. All right, and at expensive prices. Okay, they didn't want the stocks down here, but they sure as hell want them up here. But they only have X amount of dollars, so the dots probably continue. Okay, but I'm going to say that they're gonna end up diverging one way or another here. We'd have to march up pretty severe to get all the dots up in here, but until we get the Russell to break out of things, things are going to be kind of difficult in the short run. Let's see here. These all pop back up. Where am I here? All right. So once again, we'll just go over so we have here's the put call ratio. Okay. Total, right? Options. Yeah. So this is both calls, all the options, including indexes. So we're getting back down to the frothy level again. Okay. So last time we had sideways, a little bit of a dip, but because of the divergence and where we're at and all this stuff, we may get a little bit more out of this. All right. All it is just the setup. You're looking basically what you need to put in the back of your head is if you do snag a short, okay, let it run. Okay. Usually at tops too, volatility increases as you work on a trend change. Okay. That's the first one. Here's the second one again. This is equity put call, and it's coming down here again. And then the last one I think was indexes, right? Yeah, indexes. So we're waiting for a little bit more on the indexes for them to be buying calls. Okay. So that's that. Let's run through the charts this morning here. All right. All right, divergence. Okay, charts. What do we have? What am I looking for? Socks? No, this one. All right, take a look and see what I have here. Come on, where are you? Okay, so we're back to the Australian dollar 2-hour charts. Okay, so we have a sideways pattern on here. Janet Yellen talks again today too. Okay, so this is what happened when Yellen opened up her face. Now what it is she mentioned that we may have to raise rates at a faster clip. Okay, then there was a pullback on here. Okay, so now she's going to come back and talk once again. Basically, it comes down to what the dollar looks like. Take a look at that real quick here. All right, maybe another swing higher up in here, so about 101.5. And then on a daily basis, this is taking a lot of time to set up here. What is that? 101.80. Okay. Money's coming into it. ADX is reset. It's a 4-hour chart here. Yeah, maybe just a little bit of overhead supply up in here, because it comes down to the dollar. The dollar will control gold and things of that nature. Okay, so for right now, the dollar. This is basically, I'd look at it as half back. You're going to be halfway back on here for right now. What do we have for data? Where are we at? Let me take a look here real quick. Dun, 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 dun. No. Where's a chart? Where's a chart that'll work? Global. Oh yeah, we have a bunch of data today, don't we? Yes, we do. We have a ton of stuff today. Atlanta Fed, business inventories, housing market, EIA. And for you guys, if you want to follow along at home, where's my thing? Click, invite chat room for everyone to see. There you go. Oh, I hope everybody had a wonderful Valentine's Day. Some of you guys yesterday, OMG, it's Valentine's Day. I was like, dude, don't forget. You don't want to do that. All right. So I take it from a guy whose fourth wife hasn't been born yet. All right. That's one of my jokes. Okay. So we have a bunch of data on today. Yellen talks at 9 a.m. at 2. So that's a half an hour after the market opens. What do I have on Friday? Baker Hughes leading indicators in commerce. Okay. So today is a big data day. a little bit more on Thursday, but today we're just loaded something fierce with data. All right, so getting back to the charts. Okay, so we have so the dollar may run into problems here with all the data and stuff, where some number comes in soft or whatever. Some of these, remember, are going to be seasonally adjusted. I think most of the data will be the last of the Obama deal, whatever. He ended up in the, see, he ended up in a business cycle. Trump's coming to the end of one, and all we're doing now is we're shifting the spending to domestics. Presidents, when they usually go in on the first couple of the first part of their term, they work on domestic policies because they're trying to get elected. So they work, you know, shovel-ready jobs. You know, unfortunately, right? Most of us, they send us to school to become nurses and STEM people, science, technology, what's it, engineering, mathematics. Well, how many architects do you need to make a bridge? You know, that kind of thing. But we need the bodies to get out there and do it. It's all wrong, right? How many blue collar guys are we kicking out these days versus professionals? And we're in a service economy. So, I mean, I'm not knocking the guy. It's one of those, and what are you going to build? Redo the water lines in Flint, Michigan? I mean, you know, let's use some smarts on this one, right? But whatever. Okay, so we have data. So the dollar will probably come up. So gold will probably come off here, okay? I'm just treating this as just a larger sideways bounce here. Back on the top up in here, the Commitment of Traders report, they were slanted seriously something fierce long on the dollar. So from December, it took all this time to come off of here. But I'm going to say it's just going to kind of stall out. I'm not going to say it's a head and shoulders. But in regards to the ratio of where the dollar's been in the past, like under Clinton, got up to 120, but interest rates were back to normal then. You know, here they're only talking to trying to get it up to 2% by 2020. I think it'll be higher. I think what we're really going to have happen here is the people that are sitting on the couch shouldn't be sitting on the couch. They should be working, but their parents may be still in the workforce. I mean, people used to retire, right? You quote unquote retire. Even in my family, where they're heads of institutions, they're not retiring. They want to, you know, it's almost like going to the gym for these people, going to work. You know, I'm going, you know, don't you guys go golfing or something, right? Don't you retire? So they're not. So we might, if it's going to take 1, 2, 3 years here, we're going to have some of the early baby boomers here just be forced out no matter what. I mean, all of a sudden you begin to start approaching age 80, and you're still trying to kick out a few hours a week working. I mean, en masse, right? So we have 30-something-year-olds sitting on the couch because their 80-year-old parents won't get out of the workforce. But I think what we're going to have happen is those folks will be forced out. Mother Nature could come through with a nasty winter, and they say, "Screw this! I'm not getting in my car." So the parents quit. Then the kids, they'll go, okay, now I can actually, wages will kick up a little bit and they'll get off the couch. But Trump also wants to put more people into the system here too, just create jobs that, you go work for the Forest Service and, collect fees or, that kind of thing. So all of a sudden we'll end up with a shortage, I think. And that I think will begin to spark inflation. And then what I talked about in the big picture with all the wealth from those baby boomers, these people might finally be forced out of the workplace and then only have 1 to 3 years of their life left. And that's the end of it. I mean, and whatever wealth they have, their primary, it's their, wherever they're living, that'll be passed on to their children, and then they'll run amok with all the money. And then that's when we'll have lots of inflation. It's like, it's millions of heavily indebted people all of a sudden win the lottery every day. They get rid of grandma's house, they get rid of their parents' house, the parents have, life insurance, blah, and all of a sudden it's just like, millions of people with millions of dollars running around who've been under the thumb. Then think about that one. why go back to work? I mean, right? You just say to yourself, look, I just, I have, $100,000 to $300,000 in student loan debt. I can't find a job that'll actually pay the interest. I've been beat up and ignored, and it's most of it's technology, but they're beginning to live off of $3 a day kind of deal, and something hits one, whatever, then they have cash. It's like, well, then they don't go into the workforce. But I assume Trump's going to be one term and out, just due to just like with Bush Senior. What is this? Swiss franc at or above. Okay. All right. So here's the dollar. Okay. So the dollar will probably, I'm going to say we'll stall out here. I better take a look at the weekly here. Oh, God, angle of ascent goes just straight vertical. Okay, the bonds dumped. Where's this? At or below? Bonds notes are dumping too. Here's our first round of data. Okay. And the ADX is reset. Well, okay, I did treat it like a retest, didn't I? All right, so this is on a weekly here. We'll see how things bang off here. Oh, there goes what you call it. Wow, we're really dumping paper this morning. All right, so the dollar, the next target's up once it clears 103 is like, what is it? It's basically just walk it up, 104, 105, 106. Like I said, under Clinton, it was at 120 on the dollar, but interest rates were up there. We'd have to go to, what is it, 5-6%? We'd have to triple. So for wherever the dollar's at, under Reagan, when we were at 20% interest rates, the dollar was at 164. Under Clinton, when we had a balanced budget and stuff, we hit 120. So stalling out at say 110 or whatever, because I'm looking at an end game here. Within 3 years, we'll have jammed the economy into recession. Things will cool off, and then we'll get a housing blow off, and then we'll hit a quote unquote bear market, where everything implodes. All right, I have to run through these. British pound. All right, so British pound looks like it's going to drop down to here about 123.5. Okay. What's this one? Canadian dollar. Okay, so if the Canadian dollar comes down, that would mean oil would also come down. Okay, but we have debt moving this morning. The euro, the ADX is still running on this thing. There is a level down here. What's a 105 on at the lower end here. But like I said, there may be the dollar, after all this data comes out, we may stall on the dollar and see how things go. That was a lot of volume yesterday. I thought that was going to hold, and it didn't. Like how you had a lot of volume here, and then it ended up stalling on the euro. I thought, well, this is a lot of volume here. So there's really nobody in here from about 106 down. So if it reverses, it'll probably go back through this. That's at 107. All right, so this is 105. Okay, and I'm just looking at little lines where if the computer is going to stop here, the computer is going to stop. All the little lines are plugged into the computer too. Where's an obvious area? Okay, so the Japanese yen is coming off, and it blew through this blue line and down to here. Remember, these linear regression lines widen and stuff. But as the yen comes down, equities go up. It's part of the carry trade. All right, you borrow from a cheap interest rate place like Japan, and then you go and buy American paper and you collect the difference. You collect the interest rate difference, and then you collect it on the yields too. You buy American paper. Go to Japan, take out a loan. That's and it helps with payments. If you go into Japan when it was U.S. dollar in Japan at 100, you swap out all your debt. You have $20 million in debt. You swap it out to the yen. The yen falls. Now it's up to like, we'll say 120, but we're at 112, 113. So now your debt, you know, your payments are less, right? Because you're up to 113, and that all works fine and dandy unless it rolls over. All right, so the yen, I'm going to treat this as kind of stuck sideways here too, because we're in that time period, Feb, where the bills from the holidays begin to come due. And then we'll be dealing with IRAs and taxes here coming up. And then May runs into problems, usually because you have property taxes. And then that's the end of that story. So I have to look out to see, you know, if we do stop here on equities, you know, we have the frothy call buying, and we also have the divergence in the pink dots. You know, if this is it. It'll be a weaker setup. So how long will it last for is kind of how I'm kind of looking at stuff, but we'll see it when it gets there, right? Okay, crude oil. So we have EIA today. So what did we have? We had last Monday. We had it cracked the trend line, right? So oil cracked, fell down to the what is it? API number. It went down to 51, came roaring all the way back. 53, 54 was, you know, if oil gets above like 53.80, then it'll probably swing to 55. But I'm gonna just say that this V pattern here is just short covering. Okay, and now we're finding support here at 52.80. I'm gonna move up to a daily here. All right, so oil, the same sideways thing as the Russell, right? Now, the first idea of a short was because you had all the managed money in that all leaning long. Okay, so just like the dollar had that high in December, January of the amount of people that are in it, the oil does the same thing. It's lopsided commitment of traders report. Look at this, even putting in more money afterwards. Okay, so oil, all right. What do we have? So we have down, 3 bars up, and then down, down. Down, 3 bars up, and then down and a pause. So oil it's resting here. God, don't go up. Well, I suppose that would work for inflation, wouldn't it? See, my leaning is it shouldn't go up because everybody's long, but you know, if all it has to do is tick, 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 and then everybody that's long can buy more contracts. You know, because here's the OPEC. This is the OPEC agreement, and it's tried every few times, and it's not working. But they're also buying up when it dips. All right, I have an alarm. What is this? 53.80, and the 53.80 is lost. And the swing is 55, right? Is that a dot there? 55.6. I don't want that to happen, of course. I'd like to see oil come down, but you know, yeah, whatever cards you're given. Wonder why it's stalling right there. Dollar goes up. Why? Oh, all right. Maybe what they're waiting for here is they're waiting for the EIA number to come up in a couple of hours, and then sell into it. So what do we have? 53.22, 53.50. All right, so okay. And money can come into it short term. All right, so it's one of those things that oil probably go up. What is this? What did I say? 53.20, and we're 20. That's only 20 cents away. Gosh, see, it looks like forever, doesn't it? It's only 20 cents. That's $200, Kev. All right, so oil, I'll say will go up to here. I have to. Maybe we have a secondary distribution here. We'll see. Something's gonna. They're waiting for something here. I'm sure what they're waiting for is that last week's number was. I think we were inundated with oil, and then maybe here they go. Oh, we carried the one wrong, and they come back and now we have a shortage or something. But if the news is bullish and price is bearish, then you know that will probably roll over. I wish you guys would make these things clean cut when you're doing this sideways thing. All right, there's our dollar. We're pressed against the first on here, and the next one is about a dime higher. So, all right, ADX is running 2-hour charts. The money's not coming into it. When the money, you can get a feeling for this, right? So the dollar goes up and the money's not in there. I mean, this is the dollar, you can see the money flow, or you hear money flow over here. It's basically hand in hand, they overlap. That's why I do that. I put the lines over the chart. So all of a sudden it moves higher and the money's not in there. So basically what it is you have people who aren't in there. You know, like with me, I'm just kind of like, well, I think it's a sideways deal. Well, it can continue to march that way. Because what it is it's basically the bulls they've talked themselves out of buying in. We know that the trend in the dollar is up because as we raise interest rates, it makes our assets, it entices people, and you have to buy them in dollars, so it feeds on itself. But on this swing up, they didn't want to get involved, and usually what happens, it continues to walk itself up. Now, there are lots of talk about, there's not much volume in the stock market. That's fine. Look, that's fine. It's that's fine. That's how I look at it, All right. What do we have here? The dollar. Okay. All right. So here's the S&P. So we're rolling over. Okay. First stopping point is right here at 23.31, and the next one down is 23.24. I think yesterday's number is 23.23. Whatever, play the same one. What are you right here? 23.23. That'll work. Okay. So what do we have going on? So we know that we have divergence in the pink dots, and we also have frothy call buying in both indexes and individuals. So maybe this 23.40 holds. What was the previous high? Wasn't it 21.34? Okay, so we're 200 higher, roughly 10% from the previous high. It's taken forever to get up this far, like multiple years just to go up 10%. Is it on here? I got it in the weekly. 21.34 or something, right? 21, wherever it is. What's this? So here's 2015 all the way across, broke through it and came back, didn't break through it again. So what was that, April, May? April, May, or 2015, right? So April or May of 2015, and then it finally cracked after the election. So that's like 2 years of nothing. And then they managed a 10% move. That's not a really good return for a couple of years. All right. Okay, so the deal is if we do bounce and trade higher today, I would expect more call buying to come in. But there's also, as if this can't hold today, let it run, because you do have that frothy call buying. What's this, 2,300? I'd aim for down in here, the 2,300, because of, we'll say it stops on this line and bounces up. Okay, that's fine. But if it comes down to, say, like this line, it might bounce up and stall at pivot. One of these is weekly pivot, the other one's daily pivot. Where are we at? Wednesday? Okay, so if we do, here's another one too for like buying puts, right? If we do bounce this morning or what have you, and you can look for cheap puts that expire on Friday, throw $100 at it kind of thing, whatever you do. And that way you're at least hedged on the other side. Because I assume everybody has a stock portfolio, and the other thing too is that it doesn't turn on a dime. Even the 87 crash took months to develop. The market fell 20% and then went sideways for a couple of months, and then it crashed. So there'll definitely be some time on here. All right, ADX here is turning up though. What are we at? 15-minute chart. All right, so where are we at? Let's take a look here. So this is Sunday. Okay, so this is Sunday and Monday. Okay, traded higher. This is the breakout on Monday. It came back and traded below it. All right, so retested it. Okay, so then we broke out. So would that mean it would come back down? It would come back to the breakout area, right? Retest the breakout area, so it would come down to here, 23.26. That's not much, is it? So right, so it breaks out and then comes down and retests it basically. So here it breaks out, comes down and would retest it here. It's at 28.26 area. All right, ADX is turning up. All right, so that's the Russell, or no, excuse me, that's the S&P. Upper end up here is 2350. Okay. Well, that wasn't worth a shit, was it now? Well, that was all weird. Okay, little buggers. Where are we at? 45. Okay, now we're up to gold. Okay, so gold didn't like the dollar either. We broke under the 1220. All right, so now we have to say, now what? You know, is this the end of the move here? The spin here, remember, is they could say inflation. We're raising interest rates because we have inflation, you know. But the gold and the dollar are, it's, the correlation's pretty high, right? Dollar goes up and gold just gets whacked. On a bullish side, I could say that maybe this is a retest of the breakout, but this type of pattern isn't, you know, you'd want to see a pattern like this where it's longer and longer. This is more like an ABC correction. And now we had, you know, lower in gold. You know, but I will just for now, it lost the 20 area. Okay. So technically that's, you know, that was an area it needed to get through to continue on, and it's faltering. See how it holds 16, right? We're 16 in here. What's that number? 10. See, the other thing I can look at it too is, like I said before, is that this is an A wave, this is a B wave, right now a C wave, and you could have anything. You could any reason why to buy gold. Right now, it's reacting to the dollar. Say if there's strife in the world, whatever, or what. But for right now, I'm going to have to treat this. I'll treat this as secondary distribution. Okay, I'll say that gold holds the 16 area for today. Here's my little numbers here. Come on up here. All right, I'll say it holds 16. See, here's another one where it comes down to say like 16 and then goes back up over 20, right? So all this did is jab down it and test it. But I have to lean that gold's kind of broken for right now. It says 12.12. Okay, so kind of, we did use 20 on the way up. We'll use 16 as this kind of a support area. That's 18. What are you down here? 13. See, we're down to dollars here. You know, technically breaking. You know, here's 24 and then 20. It's, you know, it's one of those where you just stay short until gold comes back through. You know, here 27. But we'll see how it pans out today, because you'll know, you know, by the end of the day if they're going to pull this out or not. You know, because the dollar, you know, all the data comes out and Yellen talks, and then the dollar comes off and gold comes back up. Did we have that yesterday? Yeah, we had that yesterday, right? Yeah, we had where gold was up here. Yellen came out and talked. We actually, what we did is we saw what she was going to say. And what spooked the market is that they thought that they'd have to move quicker, which, of course, I believe they're going to need to. Gold came down and then bounced back up. So maybe we have the same thing again, like a repeat where it comes back down and then bounces back up. What are you, 24? Okay. So I'll probably say that, you know, by the end of the day, we'll try and get gold between 1221 and 1224 on here. But losing this horizontal thing, that's not very good on here because it breaks down, you know, a new lower low. So now this is treated as resistance. 23. Where are we at? 20. So $3 higher. So gold can go from negative to positive at $5, 25. See, that helps. People don't know where the price of gold is at. All they see is it's red, so it's down. So they just say gold's down. You know, if it's some people, that's how they trade. They look at it and go, okay, it's red, so sell it. You know, what are the odds that you sold it at the low? You know, that kind of thing. To get gold to go green, it need to go up $5, and that's higher than what I'm looking at today. I just want to try and hold the bullish case together just a little bit longer, and 21 to 24 would do it. It only gets it back into support, you know, or resistance here, which was support. You know, 30-minute. Yeah, trend line break sideways. What are you? You're 13. 12, 12, 12. Yeah. Okay, in the big picture, 12, 12. Where are we at? So what's this? 12, 12. So you're back into the meaty area. And then what happens when they lose 85, 75, 85? You can have it where there's a shoulder, a head, and then another shoulder. But, you know, for right now, I'd be kind of defensive on gold. Got it up to 74 or 47. And now we're back down to losing some support levels. But within, you know, like I said, we're within a couple of bucks. So maybe we're just trying to spook them out. But this was yesterday's move, so down, went back up. But then all of a sudden it's down, and then what? Right back up. People will probably be shorting into this thing here then because they see the dollar. We shall see. Okay, so here's euros. This is euro dollars. This is the big time money maker, short side of these guys. Things have taken off here. Hogs, skip hogs. Copper came back and settled just like freaking oil did right here on support. Heating oil looks a little weaker than the dollar oil. Ooh, yeah. If it cracks, heating oil will drop under here. Natty gas. All right, Natty gas looks like 304. Where we're at 297. So ADX turned down. Yeah, it looks like natural gas is going to come up to 304. Just treating it as horizontal for now. Money can come back into it. Nikkei. That one looks pretty cool. Okay. NASDAQ. All right, no green arrow here, so this is RSI divergence on here. Yeah, I think we're going to come down here. 5,200. Maybe test 5,200 here. Are you still short, man? Always. Oh, then I'm going to guess you're short Euro Aussie, right? I'm just joking. Sorry. Good Lord. 5 minutes after you leave, all of a sudden, tick, tick, tick. It's like, you got to be kidding me. But I think it's, where are we at? Where's that pound? I want the pound. It's at 120. Oh, you buggers. All right. All right. Okay, so it's coming down here. All right, so the dots here, use the dots as for staying short. That's what I'll say on the NASDAQ. Oh, well, you know, I went in myself and scooped some up. So when I woke up this morning, so it's like, to me, it looks good, but it's still, it was a rough battle on the way down, you know. That's what I had going on overnight. So I had some of the, oh, well, it's the Euro side of it. It's been beaten up pretty good. And then the Aussie side is kind of pricey. See, if the dollar goes up, then the gold comes off, and then, you know, commodities come down, and so would the Aussie. See, you may just want to play the Aussie side of it. Where the hell's my Aussie? It's the downside of having all these currencies. Yeah, we're back to beating up on the Aussie again. See, AUD, USD. See, you could short that. Well, it's in a larger sideways pattern. Okay. Gasoline, yeah, they all look like they're going to move up into here for oil, EIA number. Sugar, got to bounce back into the middle part. Silver's rolling over. Silver, they look like they're going to take, silver's in bad shape, it looks like. Here's the Russell. So our breakout's not happening. Here's Sunday. Here's Sunday. That's some pretty good selling this morning. And the money needs to come out of it. Wow, we could actually crack and go lower. Let me see here. What do we have? So here's last support levels right here. Ultra bonds maybe down to here, and then get a bounce possibly if oh, look at this one. Short the Dow, short the Dow, short the Dow. Look at that one. Where's my little doodle whackers here? Come on. Sorry about that. Come on, hurry up. Ah, you little buggers. Oh, 1 penny. It's gone down 1 penny. That's funny. And VIX futures, today's the last day on these guys, right? All right, so these guys off the board yet? I'm not sure. 0 days. I'll see if it's done, if it's off the board. Because I'm long 9 and short 10. Okay. Why don't I do it this way and just make it even? So what I did here is I shorted the April and the November. I bought the September just in case for the drought, and then I bought the December just in case if we get a hard winter. I need to buy in on March, though. March of 18. And Coco, are you doing anything yet? Not much of anything. All right. Got a revenge trade, he says. All right, back to the charts here. Okay, so there's our Dow. You best be rolling over. Bugger. Bonds. It's at a horizontal support area, but maybe down to here, 149. Yeah, C wave was very little. It was on the front end, and it barely poked its head through. I'll treat this as just a sideways pattern for right now. One more break, though, stocks aren't going to like it. Corn. Fives. Bean oil. Oh. Soybean meal looks like it's going to continue lower. Notes. All right. Okay, maybe support here, 120. The deal is if debt comes through the lows again, if they go through this lows here, I don't think equities are going to like that. Interest rates. Soybeans, keep dropping soybeans. Twos. Wheat looks like it's rolling over here. And the dollar. Okay, it bounced off of there. Pound. Where's the euro? Okay, core. Okay, here's the euro. Okay, so it did bang off of here. Okay, so we have a V bottom here. Japanese yen. Okay. All right, I need to go write my newsletter thing and I'll be right back. Let's see here.